I almost said a fart in the wind. I can't say that. No, you don't, Danny. Hello, one of the days, Thursday, June 26, 2025, and this is the week in charts. Obviously, I thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule. Looks like the show is starting to pick up in numbers again. That's good. I do a horrible job of getting the word out. I realize that. So we talk about, well, obviously current market conditions. I have a lot to say about that. Overall, things are looking up, so that's a good thing. Your favorite stock and crypto picks, start thinking about them now. We'll get to them toward the end of the presentation. We'll talk about the methodology in action, a couple of mystery charts, updates, a new mystery chart, and then I want to continue my series on a million little things will make you a successful trader and inversion thinking. And this is something that I've thought about a lot in the past, and I've done presentations on something very similar without naming it per se. And the more I thought about it, the more I added last minute. And this is probably a topic that we'll revisit again and again. And it'll make a lot of sense in a minute, but it's I think it's something really important. And I know I'm a nerd, but I'm really into this kind of stuff. There's a disclaimer screen. As you know, you can lose money trading wars. I'll have to sum it up. All predictions are about the future. And a lot of stuff. Can have what we know. And then thank you, Greg Morris, for giving me that. There's all my contact information. You can also reach me at davelandry.com. The newest thing here is davelandry.substack.com. That's my Substack, which I've been really enjoying putting together and getting a lot of writings and cleaning up old stuff. And it's been really great for me, and I think that you'll enjoy it too. So check it out. Let's talk about the mystery charts and the methodology in action. This is the mystery chart for this week. You can see it was in a very strong uptrend. Notice the Landry light, 30-something bars, meaning that the lows are greater than the moving average. In this case, we're using a 30 EMA. The 30 EMA is my favorite EMA. I know you want to party with me. Notice that the trend also began to accelerate higher. And just as is important, the trend also persisted. And as I said before, with persistency, you draw a line through as many bars as possible, and mathematically that's equivalent to linear regression. And I've written columns before talking about the power of persistency. It is something that really kind of blows me away. And the great thing about teaching is you get to see these things unfold. And I remember, and this is going to sound a little egotistical, but I remember first time I was in Italy, and that was back in probably 2008, before everything kind of came unglued a little bit, or 2007. And they had this huge screen, and it was just massive, and it was a room of 500 or 600 people. And I remember looking at the bars, and each bar was 2 or 3 feet tall, and you could see how important persistency was, especially on a smaller basis. And that's something that I never even realized, that even that short-term persistency, again, meaning that the bars tend to go up day after day after day, can be very important. And it's something that I'd urge you to pay careful attention to. Anyway, so after that nice accelerating persistent uptrend, it pulls back. And the Landry light, again, which is just a count of how many lows are above, goes down to 0. And this is what makes the Landry light pullbacks great for scanning. You look for 10 to 20 bars of upside Landry light, and then you look for 0, meaning it pulls back to the moving average. Now, in my own personal analysis, as I've said many times, I'm looking at upwards of 2,000 blank charts a day. So I'm not scanning per se for things like this, but as you can see, it would be really easy to scan for something like this, and maybe be good to scan for them to make sure you don't miss anything or whatever. But I feel like I'm going through so many charts and so many iterations of everything where I feel like I'm going to catch these things. The negative side of scanning, just not to digress too far, imagine that me digress. The negative side is, what if you have like a near miss type of setup? Because a lot of times this might be a TKO or something else, and it might just come within like a hair of that moving average. So that's something to kind of consider when scanning. So scanning, I kind of see scanning as more of a backstop than something that you want to do to find setups in and of themselves, at least with my methodology. Anyway, when it kisses the moving average, the Landry light goes to 0. In this case, it actually went to -1, because you've got a slight, if you squint your eyes, you can see that the high is just below the moving average. But that's okay, because as a general statement, well, let me rewind that. As a general statement, you don't want to buy a market below it. And we're not, because the trigger is going to be above the 30 EMA. And I'll flesh that rule out again when we get to crypto. It'll make a lot more sense then. Some great examples there. Anyway, there's the parameters down below. Entry is here, stop is here, and the IPT is way up here. So I'll follow up on this one to see how it shakes out. Here's an update on TFPM. This was a prior mystery chart. Notice that the Landry light is all green. We did have a kiss or two to the moving average, but for the most part, it stayed green, or it did stay green. Acceleration higher once again, nice little pullback to the moving average. One thing I've been kind of noodling with, and I need to make sure I follow up on these things, but one thing I like to do at some point in time, and I don't know how it would work out, but I like to do a one pattern challenge where we all take a look at just one pattern. The Landry light pullbacks would be the pattern I'd pick for this. And we all trade it, and I would have you show me what you're thinking about doing, and I would give it a thumbs up, a thumbs down, and then you would make a decision on whether or not you want to trade it. And we would all, if it's something that I liked, it's like, okay, well, I'll take the trade with you, or I'll say, well, maybe I'll pass. You go ahead and take it. Let's just see how we do. Just trading one pattern over a period of 6 months or whatever. They hadn't fleshed it out or anything. But I think it'd be something that'd be really cool. And one reason I'm thinking about this is a while back, I remember showing 3 or 4 examples. We had a pretty good run. We don't always have a good run, obviously, but we had a decent run in the trading service. And we had 3 or 4 stocks, and they all set up nicely, and they all worked out, knock on wood. And I remember going back and looking at them, and they might have been TKOs or some other patterns that I trade. But one thing that they all were, the common denominator was they all were Landry light pullbacks, just as the 2 today, or 3 today actually, are all Landry light pullbacks. So I know I'm a nerd, it's being a little egotistical, but I really think that's a great little pattern, and it's so darn simple. And by the way, even though I use just a blank chart, the reason I come up with some of these patterns, more specific patterns with moving averages and such, is to make them more easy for people to recognize and to serve as a teaching example. But in the process, it also turns out to be a pretty good pattern in and of itself, as opposed to just me eyeballing a chart. It does give me a little frame of reference. But I do, just FYI, I do go through all those charts without any indicators whatsoever, and then I might add the occasional moving average as part of my analysis. But anyway, you can see it pulls back to the moving average, Landry light goes to 0. The parameters are down below. Entry was here, stop was here, initial profit target was up here. Let's see how things shook out. Now, this is the one I talked about last week, obviously. And one thing that I pointed out was that it initially was profitable, and then it went into the hole. And that swing was a pretty substantial swing. It was in thousands of dollars on a 100K account. And it would have been very hard for me to hold this position had I not recommended it and was part of the trading plan. It's weird. I was thinking about that just this morning. I look at some stocks I have in my portfolio that are losers, and I get real upset about them. And I look at the stocks that I recommend in the service, and it's like, well, they hadn't hit the stop. I mean, I'm not happy that they're negative, right? Or go negative on some days, but I feel like, okay, well, I'm kind of stuck, so to speak, following the plan. So I'm just going to follow the plan. So there's nothing I can do about it other than honor my stop. So why should I worry about it? I know, haha, but it's a lot easier for me to just look at those stocks and follow that plan. And that's sort of from a selfish standpoint, that's kind of my commitment device, is I'm not going to recommend anything to you that I wouldn't take personally, and I wouldn't recommend anything to you unless I also take the setup. And it forces me to follow the plan. And that's one thing that I talk about quite a bit ad nauseum, is create some sort of commitment device for you to follow that plan. Anyway, that was the first loaf. So I rounded the shares down to 700, and that's what I call my model account, where I take these trades. And I do take them in other accounts. Anyway, I was looking for 1,000 in the first loaf, got 900 out, which is fine. And the entry was slightly hot. The entry was like 10 cents higher, and then I took profits slightly early on an initial profit target using a tiny bit of discretion, which I would encourage you to do if you've been trading for more than a little while. But anyway, so that's that so far. It's up a smidge today, so we'll see what happens. This one I mentioned after it triggered. It's set up in between webinars. And by the way, nearly all of these mystery charts, unless I show something in the Facebook group to my peeps, but nearly all of them come directly from my trading service. Anyway, oh, you can see the archives, davelandry.com/archives, and check those out. And the newer ones are now on YouTube, so you can get them several days old on YouTube by going to my YouTube channel, youtube.com/Dave Landry. And it's called the Core Trading Service there. Anyway, this one did accelerate higher. Now, it traded a little sideways. It made new highs, but that's okay. That's a pattern that's similar to what I call a double top knockout, where you have two minor tops and they have a bit of a knockout move. And it's also, you guessed it, a Landry light pullback. So there's the parameters. Entry was here, stop was here. Initial profit target up here. And so far, we just can't seem to get there. Now, it did trade a little higher from where we started, so we do bump that stop up, and that's before the initial profit target is hit. You will trail the stop higher, usually on a 1-for-1 or 1-for-1-ish basis. If stock goes up 10 cents, you bring that stop up 10 cents. Although in more recent times, I'm a little bit more lenient on that, bringing that initial profit, initial stop up. Let me rewind that. So when you start a trade, you have a full position on and you have a stop, okay? And that stop is trailed on a 1-for-1 basis as a general statement. Now, in more recent times, if it goes up just a little bit, I'll often leave that stop where it is. But as it begins to move higher, I will bump that stop up again on somewhat of a 1-for-1 basis. Once that initial profit target is hit, that's where the secret sauce comes in. That's the secret to making a lot of money longer term, is letting that stop widen out to the longer term volatility of the stock. Anyway, so this one has gone completely sideways for nearly a month. So what should you do? Okay. This is obviously dead money, right? What should you do? Nothing. Absolutely nothing. Follow the plan. If you're not stopped out, stick with it, okay? In for a penny, in for a pound. Dead money, I think Wikipedia defines it as a position or investment that has little or no chance of making you any money. Well, if you do that for a fact, then by all means get out, but you don't know that. Now, I suppose if you're doing I remember many years ago, we got into a jam in the hedge fund, one of many, that I was a technical analyst for, the only one that they had. And I remember looking at all the positions and said, we could hold these positions to expiration and we could lose a lot more money on them, or we could shut them down now and that's pretty much mitigate the damage. So that's a different type of trading. But when you're just trend following an underlying commodity or stock or whatever the case may be, you don't want to get out just because the stock is taking a breather. The stock has done nothing wrong. It hasn't even closed below its 30 EMA. Anyway, so I slipped in a little bit of a dead money report. I'm going to flip through this really quick because we talk about it every week. The main thing I want to point out is that we did have a buy with the TFM 10% system 1, 2, 3, 4 about 6 weeks ago. I didn't like that signal, although a signal is a signal, right? And it's one thing that I didn't, as I've said before, one thing that I didn't think about when I designed the system was what's going to happen when you have a trigger and the market has begun to implode a little bit. So if you're following along with my methodology, my core methodology, I'm always waiting for entries, which means that I am buying stocks higher as opposed to trying to catch that falling knife. But in this particular system, I didn't think about putting in some sort of performance metric for the entry. So anyway, I didn't like that signal, but then when the market turned back up, then I liked it a little bit better. And now we're on the cusp of all-time highs. So 0% would mean that we're right at all-time highs. The green zone means you're less than 5% away from, in this case, 50-week closing highs, which in this case is also the all-time high, okay? So this green zone, again, means you're within 5% of 50-week closing highs. The light pink zone means that you're more than 5% away from 50-week closing highs. And then the 10% is what I used to call my sell line or buy line, however you want to look at it, means that you're more than 10% away from all-time highs. As a general statement, as long as you're within 10% of all-time highs of a market, the market is doing okay, and you should try to hang with it. Individual stocks are going to be a little bit different, a little bit more volatile. Crypto, same thing. 10% might be, I almost said a fart in the wind. I can't say that. Anyway, inconsequential. But for something like the S&P 500 or most indices, that's a good round number. So you want to try to stay long. And my whole thinking with this system was, if a market is going to lose half of its value, it's going to lose 10% first. Okay. The question is, the service is on sale for $97 per month every month, or is it first month and then goes back to the real price? No, as long as you stick, if you get a sale price on something on my website like that, like a monthly thing, there's no teaser rates. So it's like, if it's whatever it is, you can stay, it'll be that rate forever. So thanks for asking. I appreciate that. All right, Landry 100 is just a proof of concept, and we've talked about this quite a bit. And I want to show how this trend following thing works, and it's been a good exercise for me too. And a lot of things sort of come to light by doing this. Momentum ends badly, even good trades end badly. I just wrote an article, I think it's called "Unhappy Endings." How all trend trades end badly, and this sort of is exemplified through this momentum list. And it's a good exercise, if I say so myself. And there's no money management in it, as I'll show you in 1 second. That's one of the problems, so to speak. But I'm not using real money in this, although I have experimented with it a little bit. And as I've been saying quite a bit so far since doing this, starting last May, that was the reboot of it. I did it years ago, and now I'm redoing it now. But speculation is alive and well, and all of these stocks were bought at brand new highs. And this one here was the biggest winner so far, and it rallied up over 3,000%. Now, it did implode a little bit, and I'll show you that in just 1 second. In fact, let's take a look at that now. So one thing that is an anomaly, or one anomaly, I should say, of momentum-based trading, trend trading, is that you depend on outliers. And as I've said 1,000 times, I was speaking in Dallas probably 15 years ago. Peter Mothy had invited me, and afterwards I was staying at his house. He had a little debriefing with me, and he gave me a little constructive criticism, which I probably needed. And one thing he pointed out is you're making it sound too elusive. And I thought about it long and hard after that, and I was like, you know what? I'm not going to change what I say, because that's how I feel, and then that's what I know when it comes to trend following. And as I've said a million times, we'll have an okay time in the service, a good period of time, right? And I'll get a call from a client like, Dave, I'm quitting. I'm like, okay, why are you quitting? It's like, I can't make any money. It's like, well, geez, we just had a pretty good run. Why are you not making money? And I'm like, did you get this big winner, or did you get XYZ at ABC? No, but I took all of my other turds you recommend. And it's like, okay, well, there's your problem. It does depend on the occasional outlier. Now, keep in mind that I'm taking weakness out of the portfolio and replacing it with strength. So the strongest stocks will remain in the portfolio, hypothetical portfolio. Let me just get that out there. But if you added up all the trades going back to last May that were taken out, you have a loss of roughly $150,000. So it's not very impressive, right? However, just to show you the power of the outlier, Now that trade was much, much bigger. Now it was up 3,000%. It stopped out for only, I know, only, that'd be great if every trade was up that much. So you gave up nearly half of those profits when I took it out of the list. So again, a little bit of money management would probably be a good thing, but just for educational purposes, you made $177,000. That's on a $10,000 investment, 1,700% and change, almost 1,800%. So you can see this one little trade, and again, this is the proof of concept that I'm going for with this, and I'm going to continue to run this list. This puts all these closed trades, and again, most of these are going to be losing trades, actually puts you slightly in the black, and now the entire portfolio is also profitable too. So you can see how it can work over time. It's going to be volatile as all heck. I had a hedge fund years ago, and the period wasn't fantastic. We went through like a print money phase, and that's when everybody gets excited. And then, of course, you go through the drawdown phase, and then the print money phase comes back, right? That's just life and trading. And it was not easy for him to be able to follow it. So I'm not suggesting that it can be followed easily. You would definitely need some cash, and you definitely would have to be very flippant about it. That's one thing that attracts me to this. If I ever did it with real money and had plenty of money to do just this one thing with, right, I would be really flippant in my execution. And I think with 100 stocks, I'm not gonna say it'd be easy, but it'd be fairly easy. I wouldn't get too attached through like the endowment effect, the behavioral biases, endowment effect. The longer you hold something, the more you tend to like it, make it your own, don't want to give it up. But I think if you had 100 stocks and you had better looking stocks to go in, you'd be more inclined to kick the losers out. You got to treat as I preach, you have to treat your stocks like you treat your employees, right? You've got, I don't know, I've said this 1,000 times. You got 4 employees, okay? You got 3 busting their butt. You got 1 sitting on his or hers or theirs, okay? Who are you going to fire? You're not going to say, well, that 4th employee that's not doing a damn thing, maybe tomorrow they'll start working, okay? But in stocks, you do just the opposite. It's like you get rid of your winners a lot of times, and you hang on to your losers. Not you people, but you get the idea. The complete novice. Anyway, so this week showed the problem in 2 ways. The lack of money management, okay? Now, I did experiment with this on a small basis. And what I did there, and I still have some open orders, is very small amounts. But I put in an order, a good till canceled, extended hours included, after I was included, 50% trade to take off half at 100% of the, at 100% profit. So it would pay for the entire position, okay? So you put in $10,000, and when the position's up to $20,000, you sell half to get your $10,000 back, and then you let the rest ride. Again, if we were doing this in the real world, which I might do someday, but for now, just gonna experiment a little bit, I definitely would have to put some money management in. But anyway, this one I was kind of excited about a few days ago. I put it in, and within a couple of days, it went straight up. And by the way, this is something I wrote about recently. I'm going to publish probably on my website and Substack is a little bit more about what this Landry list is about, this Landry 100 is about. And one of the things I pointed out is if you're trading breakouts, the failure rate is pretty high, okay? So you're going to have to trade a lot of them to make money. There was a breakout trader a while back. I forget exact numbers, but his numbers were abysmal as far as how many stocks he actually got paid on, but he was able to just kind of plod through it because he knew that an overwhelming number of trades would be losers, but the occasional winner would make it all worthwhile. Very difficult way to trade, okay? I kind of reached the point where I like my hybrid approach. I like my pullbacks, okay? I like taking those partial profits. I like trailing that stop. That sort of fits my psyche. And I can get it to a point where I'm a little bit more accurate than something like a pure breakout trader. Now, I will show you some breakout trades here in a second that I do take in crypto, but for the most part, I'm a pullback player. Anyway, one thing that you're going to be faced with is notice that this stock, the entry was here because I just grabbed it as it was making new highs. That's the whole rules for this Landry 100. And then the next day, it kind of imploded. And that might have been hard to hold through if you were just trading that breakout in and of itself. But anyway, it was up 51% in one day. Very, very, very impressive run. And then the next day, look what happens. It implodes. And I actually took it out of the list at a loss. So there's something that was up over 50%, and then it would have lost. So again, if you're doing this in real dollars, money management would probably be necessary. I'm just trying to keep this list as pure as possible and not put too many rules into it. Anyway, I started spreadsheeting it again. I know you're partly with me, but it's kind of cool. You can see where the money's flowing, and that's one of the advantages of this. And you can see gold and industrial metals and minerals, which are going to be your silvers and platinums and things of that nature, or the biggest hunk of the 100 stocks. But what's kind of interesting is that those pieces are actually getting a little bit smaller lately. So it's good to sort of look at where the money's flowing into the market. And I've enlarged them here so you can see them a little bit better if you wanted to screenshot that or whatever. But anyway, again, the great thing is you can see where the money's sort of stacking up and flowing. And it kind of alerts you, even on a smaller basis, it sort of alerts you to things that might be worthwhile, like small scale nuclear. We nailed one of these stocks a while back. Unfortunately, it went straight up and then came right back in. We made a decent amount of money on it. But for me, I'd rather ride something for 2 or 3 years and have it go up forever. But better than poking the eye. But anyway, there's one small scale nuclear in here, and that's something that we might want to pay attention to, even though it's just a very small piece of this. It kind of alerts you to some of these areas that are on the fringe that might be worth a shot. So for me, this has really been a great experiment. I'm glad I started again. Even though it's a little bit of work, I think I'm going to continue to do it. So anyway, I talk about these each week, so I'm not going to bore you too much. But momentum does it badly, as you saw on a couple of those, right? And it's a great way to see the money flows and to see what's happening. And like I've said quite a bit, in a bear market, there's an old adage, there's always a bull market somewhere. No, there's not. No, you don't, Danny, implied, because eventually they get to everybody, okay? Now, a while back, and this is, again, in the article, spoiler alert, a while back when the market was really iffy and beginning to drop, we had grocery stores, we had a few drugs in there, and these are defensive type of issues, defensive stocks that people still need in a bear market. People need the groceries, people need drugs, etc. Some people need more drugs. And not to confuse the issue with facts, but there tends to be a little flight to that safety, which is technical analysis 101, right? Where's the money flowing when that happens? Okay. Any questions on all that? As I've been saying quite a bit, I've been doing a series called A Million Little Things, and everyone thinks a switch is going to flip and bam, you're a trader, right? Well, it doesn't work that way. What will happen is you're going to have little tiny epiphanies along the way, and very little small adjustments you can make to make your trading better and better and better. And it doesn't have to be one huge thing. In fact, it's better off from a neurological standpoint if it isn't. It's much easier to make a small change. And I forget who it was, HSIH, I think is his name. And it's like, if you want to make a big change in your life, make a small change. And an example I often give is we have some friends that are a little bit on the pudgy side, him more than her. As I said before, it's as you get a little older, weight's not as much of a problem. What you considered heavy is not that big of a deal anymore. But I digress. Anyway, they go on their 6 or 7 fad diets a year, and each time they end up a little fatter. And that's because they go on such an extreme diet that their body just rejects it. We have a homeostasis about us that keeps us alive. Our temperature can't really go up a few degrees or down a few degrees, otherwise it would kill us. And if you try to put that big shock to your system, your body's going to fight. It thinks there's something going on. It's going to fight to stay alive. And you end up worse than you were before. But anyway, so it's better if it's a bunch of little things. Okay, so this week I stumbled across a video on YouTube, which actually dovetails into a lot of things that I've done. I found some presentations going back 10 years or so where I talked about a lot of this type of stuff. But I was very happy to find this video, and I'm going to show you the gist of it in just 1 second. And one of the things they talk about is inversion thinking. And inversion thinking is kind of thinking a little bit about the opposite. And I'll probably do a presentation at some point on opposite George. But you need to kind of think about things and turn them on their head a little bit, as opposed to like how great this trade could be. It's like also think about what could go wrong. The example they gave in the video was they were studying the planes that survived in World War II. And their thinking was, well, let's reinforce these areas that got shot up. And when I first watched the video, I'm like, well, hang on a second. These engines didn't get hit at all. And surely if the engines got hit, that could take out an engine and take the plane down. And a guy by the name of Andrew Wald came along, and he basically pointed out that you're using a survivalship bias, okay, a survivor bias. And I'll give you an example. I recently came up with an IPO pattern, just kind of noodling around to kind of bottom fish a little bit in IPOs. And I think there might be something there. I shared it with my Facebook group. But the one thing I pointed out was I'm looking at a database that the survivors of survivors, okay? I'm looking at a database of survivors. I'm not looking at a database of the ones that didn't work, okay? So it's kind of just the opposite of what we're looking at here. But the thing is, the ones that worked were because these stocks are still in business, and there's probably an edge there. Unfortunately, though, you don't know how many stocks are going to go out of business and how many times that pattern would have triggered. So you would need what they call a survivor database, I think, where you would have those old stocks in it. But anyway, getting back to this, Mr. Wall pointed out that where the bullet holes weren't as relevant, I should say, as just the opposite. You need to look at the planes that went down and what took those planes down. And he pointed out, obviously, the engines and the tail section would be a vulnerable place to get hit. And one thing I totally overlooked when I was looking at this was, what about the cockpit? And notice in this case here, there's no holes in the cockpit. So obviously you take the pilots out, then the plane's likely going down, right? Or will go down. So sometimes you have to use this inverted thinking. And again, around the ailerons, I guess over here, whatever, have been spots where would likely take the plane down. Now, everyone reminds you of projects. You know, you have a new project, there's a wild enthusiasm phase. Everyone's enthusiastic going into the trade, and then once you get into a trade, it's like you begin to become a little nervous and pessimistic unless everything's going swimmingly, obviously. And in reality, these two things need to be flipped. You need to kind of think along the terms of what could go wrong and how can I pick a stock that would fail? You know, what would make this go wrong, as opposed to getting all excited. And then if things work out, obviously, then you could be excited. Now, a few weeks ago, I kind of introduced the concept of toward thinking and away thinking. And I'm a big fan of Clarkson's forum. I'm a big fan of Jeremy Clarkson. He's a hoot. He's a trip. And he has, at least in this particular program, he tends to have this toward thinking, like, I'm going to just get some pigs. And Charlie's like, well, where are you going to keep them? And he's like, I'm going to keep them in the woods. It's like, they're going to eat all your trees. He's like, nah, they'll be fine. It's like, I'm gonna get some sheep, and he's talking to the rancher or whatever. He's buying sheep from, and he's like, rancher's like, well, how are you gonna keep them in? He goes, oh, I got a wall. He goes, well, they'll jump a wall. So you need the toward thinking, but you also need the away thinking too. Both are crucial. And one of the later episodes, it's like Jeremy's all excited about his menu at his restaurant, and then Cheerful Charlie, as he's called, ironically, as whatever, sarcastically, says, "Well, where are your prices?" He tends to see the wrong in things as opposed to seeing the good. And you really need both in farming and in life and in restaurants too, I suppose. Now, back in 2017, I actually did a whole presentation on this. And there's actually a reason you feel this way with trades from a neurological standpoint. And there's without getting into the whole presentation, you can go in and watch it on my YouTube channel. But you have two different parts of your mind working, and that comes from Brett Steenbarger talks about that. So this is kind of a neurological thing. So in reality, kind of piggybacking on this thinking, you actually have to use that inverted thinking, like what could go wrong with this trade? And another way of doing it is like, okay, well, how is this trade crappy as opposed to how is this trade fantastic? Now, in the video, he talked about how these Stoics, such as Seneca and Marcus Aurelius, would think in terms of what could go wrong, what's the worst could happen. My father, God rest his soul, whenever I'd call him years ago, with the problem or situation, he would say, what's the worst could happen, and then improve on that. It's almost like you need to embrace that worst thing and figure out how you would deal with it. And the beautiful thing is, usually it doesn't turn out to be the worst thing, but if it does, you can deal with it. My wife calls me hobby boy. This is a dining room table I've been building for about a year, and I'm at that 2 weeks phase, every time she asks me, how long? 2 weeks. But I tend to be a hobby boy, as she calls me. And I found this tree out in the woods that had fell probably around Ida time, when Hurricane Ida came through. Big old huge tree, as you can see here. Some of these are 20 something inches around. And I remember while I'm out there looking at this thing, and it was still propped up, and I had to drop it further. So I'm out there with a chainsaw, and I actually found myself thinking, what would be the best way to kill myself doing this? And it's like, okay, well, I need to get, underneath it and cut above, or I need to get someplace where if this thing goes one way or the other, I need to make sure I'm right there so I get killed, And I know it sounds a little quirky, but it's like, okay, where could I be to not get killed once you kind of think along those lines? And I'm kind of a mess in the garage, and I think I cropped out most of the mess in here, but there's plenty of mess to go around. People that have clean garages don't build anything. If you build stuff in a clean garage, then you have too much time on your hands because you could be building. But I'm always knocking a drink over or knocking over small parts and things like that. It recently, without even seeing this video about inversion thinking, I started thinking, okay, where can I put my drink to guarantee that I spill it? It's like, okay, I'm working right here, I'm sanding or whatever. Let me put it right next to me, okay? Or maybe I'll put it up on top of this drill press, because everything's a horizontal surface, right? And as soon as I bump that drill press, my drink's gonna fall to the ground and whatever. Small parts, same kind of way. It's like, where can I put this little box of small parts so I can ensure that I knock it over? And I did knock over some shit last weekend, but not as much as I normally would, okay? And then, along the lines of safety, okay, so like I said, I cut this tree down, I hauled it out of the woods under super high tension. Like, okay, where can I stand and ensure that the cable pops, it comes flying at me, Again, where could I stand with the chainsaw to make sure the tree falls on me? When I'm using a saw, what would be the best way to cut my fingers off? Okay. It's like maybe use a clamp instead of putting my hand there, maybe use a push stick or whatever. And you kind of need to think along these lines. And I also, when I built another table, a coffee table, and I welded that. So it's like when I go to weld, it's like, okay, well, how do I get a sunburn? Okay, don't wear long sleeves. And how do I ruin my eyes? Make sure you got your welding mask ready to go. You got everything going. It's so on and so forth. So it's negative thinking, this inversion thinking, but you have to think along those lines, and you can't always be an optimist. Now, the Stoics talk about the as I mentioned a second ago, what they call the premeditation of evils. It's like what would almost guarantee a failure. So putting that to trading is, well, how do I guarantee this trade doesn't work? Well, I'm going to take a mediocre setup. Okay, I'm not going to plan it. I'm going to have a lack of focus. Okay, I'm going to forget to take setups. I'm not going to have a little piece of paper, or even better, an alarm, or even better, maybe an order in place so I catch that order. So I want to make sure I don't do any of that. And I want to make sure I'm not going to follow the plan, and make sure I do micromanage the trade. So you kind of get the idea. I mean, as I was thinking about these, there's probably 200 or 300 more. Now, Charlie Munger was mentioned, and I have his book. I think I picked it back up. It's about that big. Not that I'm a value investor or anything close to it, but he does have a lot of good knowledge about life and such. So anyway, I thumbed through the book, and then I found this. The Munger system of avoiding dumb stuff will alone strictly adhere to allow you to prevail over your betters, no matter how smart they are. So his whole point was the first thing you need to do is don't do dumb stuff, okay? And that in and of itself will really help you out. And who was it? William Eckert talked about intelligence in trading. And a lot of very intelligent people aren't good traders, and a lot of average at best people are, okay? And because the smart and intelligent try to outsmart the market or try to figure everything out, and then the average, as a general statement, tend to say, well, what could go wrong, and how would I deal with that, and to have a lot more of this adverse thinking. So the Munger system, avoiding dumb stuff, is important. I think it's called Poor Charlie's Almanac. And again, it's about that. It's huge. A lot of good little things in there, though. And in that particular book, he said, always invert Jacobi. I think Jacobi was the inventor of algebra, and he would look at a problem kind of like backwards, like how do you get here, and then work backwards. And that's a good thing to do. How do you fail at that trade and work backwards? And many times I've often said, you know what you're doing wrong, you know what you're doing wrong. Well, a lot of times you raise your hand, and I'm raising both of mine. How many times have you taken a trade and it fails miserably, and as soon as you get stopped out, you go, I knew I shouldn't have taken that trade. Okay, so you knew ahead of time you shouldn't have taken it. Okay, so that's kind of where that inversion thinking comes in. It's like, think about the worst thing, and how do you make that crappy trade? How do you make that trade not work? Just trading from the seat of the pants without a plan, and so on and so forth. And we're all guilty, and I know I'm guilty too, quite often. But anyway, always invert, Jacobi said. He knew that it is in the nature of things that many hard problems are best solved when they are addressed backward. Now, another thing that he mentioned was failure pre-mortem. And this is something that I was kind of glad to see, because this is something that I talk about often. When you get into a trade, I often talk about the F-yeah test. Okay, so the F-yeah test is you got to feel like, F-yeah, this setup looks fantastic. But the flip side of that is, okay, that's your toward thinking, and that's a good thing. Okay, I was going to be a pessimist, but I figured it wouldn't work out. Said Mr. Right. Okay. But you also need that away thinking. What if it failed miserably? And if you could say, so what? And that's why I often talk about, done complete presentations just on this, but time traveling to the future. Okay, how's future Dave going to react? And if you could say, I will shrug my shoulders, as opposed to saying, I knew I should have taken that trade, then you're going to do just fine. So you want to think about the trade from a perspective of what if it fails miserably, okay? And then also inversion thinking, how could you take a trade that would fail miserably? There's, it's like there's more than one story of this, but I actually know one because I was telling Larry McMillan about it, and he's like, he named somebody else that had a very similar story. My broker from way back in the day, he had a futures trader that was a very wealthy, I'm guessing, just making some assumptions here, but I'm assuming that he had some family money because he seemed to have unlimited flow of money coming in, and he was the absolute worst trader of all times. I would say 95%, maybe even more of his trades failed. And I asked the brokers, like, why did I take the opposite of everything he does? And he said, well, there would be a bit of an ethical situation there. And then the joke I've heard before about similar stories is that, what do you do when your client runs out of money? Do you give him more money to trade so you can continue to do the opposite? I have a neighbor that bets a lot, and I just don't have the energy to do it. And I asked somebody else to place opposite bets on him once, and it didn't happen. But I don't have the energy, but I think that you could probably be very successful just doing the opposite of what he does. Anyway, so let's shift gears and get to crypto. Bitcoin. Bitcoin has finally made it back to its prior highs. Unfortunately, it hasn't busted through yet. Now, you get on your X feed and the Bitcoin aficionados, they're talking about how great it is and everything. But for me and for now, it's still stuck going sideways. Now, it's not too far away from all-time highs. I think if it can get to new highs and stay there, I think we could possibly see some huge runs. There would be a lot of FOMO. Let's say 112, let's just say 113 or higher. If we can get to 113 or higher and stay there, there'd be a tremendous amount of FOMO that would hit the market. Now, last couple times we hit 100 and change, the market sold off. And I think some of that was attributed to the early adopters, people that just had ungodly amounts of money in Bitcoin. I forget the exact amount it would be worth, but it's in the billions. If you were to take, instead of buying the 2 pizzas with the first Bitcoins, forget how many it was, something like 2,000 or 2,500 or something ridiculous Bitcoins, they bought the first pizza with, those Bitcoins would be worth billions of dollars. And so my point there is that maybe some of the early adopters with Bitcoins at 25 cents or $1 or whatever were unloading when it hits these 6-figure numbers. But anyway, for now, it's just consolidating on sideways. It has improved as of late. It was sort of rolling over and it came right back. Again, pay attention to that 30, but also pay attention to the fact that if it's bouncing back and forth around the 30, then it might just be going sideways, and of course, draw your arrow. But overall, it still looks okay. But I'd like to see it get through this resistance and keep on going before getting too excited. Now, Ethereum has really lagged, and if you watch all the memes, look at all the memes out there, lots of memes making fun of Ethereum. And I wouldn't get too excited about Ethereum just yet. It has a lot of overhead supply to overcome, so you want to leave that alone. Now, you want to pay attention as a general statement to Bitcoin as your bellwether. And as long as it's hanging in there, then you can go after some of these shit coins. And sometimes all I do is I just buy these things as they're going straight up. Now, this is completely opposite of what I do in stocks. The only time I would ever do that in stocks would be if we got into another market like 1999 where everything was blowing and going straight up, I remember I mentioned a stock in a column and I forgot to take it, and that's one of those painful things, right? And it was like a $30 stock or something, and it went up 50 something points, 58 points if memory serves, that same day. And it was a clean entry, clean trigger, the whole 9 yards, and I still beat myself up. There's a few big moves. I'm not going to mention one because somebody here was in the same, would miss the same move, and I want to pour salt in both our wounds. But it's so funny, those few big trades that you miss really get to you, and they never leave you. But that's a crazy market we were in. You could just pretty much buy anything. Now these shit coins, SHYT, they go through this boom bust cycle that's really quick, and that's one reason why I think if you want to learn to trade, and I'm talking small bucks like $1,000 in an account or something, would be a good way to learn to trade with these shit coins, because you have a bull and bear cycle that happens really quick, and I think you're able to go through the emotions. Whereas if you're trying to learn how to trade stocks, you might go 6 months where you're just chopping around and fighting it out, and you probably would give up. A lot of people do give up during that period. Or on the flip side, you might hit it just right and everything goes straight up and you think it's always going to be this way. So you got to be careful either way, but those cycles happen pretty quick, and you really have to go through a few of those cycles, because in good times it'll go to your head. And like there was someone I know, an acquaintance of mine, and he started trading crypto. And his first month he did 40%. He asked me, is that about what he could expect every month? You know, and I showed the spreadsheet on this a while back, and I forget the exact math, but I know within 5 years, I think he'd be a billionaire and 100 million after a couple years. So I love you guys, but if I could make 40% a month, you never see my fat ass again. Anyway, the thing is, good times can be just as bad for you as bad times. And the examples I often give there is, I know a couple of people who just absolutely printed money in stocks, hit it just right, and then they were going to get out when they hit 5 million or whatever, and then their accounts evaporated. And in both of these specific cases, I was begging them to cash out, pay off your mortgage, so at least you have a free place to live. Anyway, those cycles go pretty quick. You will have to go through a few of them, and that's the great thing about crypto. Now, sometimes with these pairs, again, you could just buy the ones that are going straight up. There's a few caveats. They have to be liquid enough to trade, and usually if you see a lot of long tails, that's usually a sign that they're not liquid enough. So nothing's really jumping out at me today, but I need to keep doing my homework, obviously. There's that banana. Now, there was one up here that was pretty big. Like this one looks like it might be a little thin, just judging from it. So, but I would be more interested in something like this that's going up than trying to pick a bottom or anything. And as I said a second ago, if you look at even Ethereum would probably be a good example of that. And I know I said this each week, but we get new people each week, so bear with me. And then we'll open up for questions. But if all you did was avoid a market that was below the 30 EMA, you would stay out of a lot of trouble. And you can see that this market, this is Ethereum, from most of 25 up until recently has gone pretty much straight down. So I'm still amazed to this day at how something so simple like the Landry light, lows greater than the moving average or highs less than moving average for downtrends, can keep you out of a lot of trouble. Okay, I'm going to shift gears and get into stocks. If there's no crypto, we'll give it another second. It'll be in the background too. We could always jump back to it. Let me go ahead and get my stocks booted up. And I'll cover the markets real quick, and then we can hop into individual stocks. By the way, here's the Landry 100. If we sort them by percent change, you can see there's some decent moves in here. 10 and 20% moves. Let's see. Oh, here we go, percent change. And obviously, again, like I said, momentum ends badly, so there will be some stocks that are getting whacked too along the way. So I don't make it look like it's all a bed of roses. But these big winners are going to cover your butt, so to speak. So that one's up 400%, 200%, and so on and so forth. So keep in mind, if there's a constant window dressing, I'm constantly putting in new stocks and taking out old ones. But you can see some of these have been in for a while. This was a silver stock back in the last day of the year, last year, 2024. So it was back here somewhere, was making brand new highs, and I put it in right there, okay, or right there. Anyway, you can see you're buying at these brand new highs, which is a little scary, but you're buying 100 stocks, and that helps to kind of mitigate the risk and help ensure that you're going to catch the occasional outliers, these triple-digit returns like you're seeing here. Anyway, let's hop into the overall market and drill down a little bit. S&P 500, look at that. I think we're pretty much close to all-time highs, so that's certainly a good thing. Not going to argue with that as a trend guy. As I often preach, these V-shaped recoveries at high levels are often hard to sustain, but so far so good, okay? And ideally, I want to see us break out past the top, this prior top in here, and stick, and then maybe look to play some pullbacks along the way. But so far so good there. Nasdaq Composite, look at that. It's just a little bit away. I almost said something dirty. Only a tiny bit away from its all-time highs. So far so good there. Again, that V-shaped recovery is still going to be a problem. The Rusty bouncing a little today. It's still below its 200 simple, and it does have a lot of overhead supply to overcome. So Rusty continues to disappoint. Never fails to disappoint and disappointing. NVIDIA broke out to all-time highs yesterday. That's a good one to watch, obviously, as a bellwether for the semiconductors and possibly the overall market that well, because that sort of signifies that the bull market is alive and well when you see stocks like this just banging out new highs with vigor. Q's made all-time highs yesterday and all-time highs today. So far, so good there. Semiconductors, look at that. They've been on a tear. They plowed through this overhead supply, and now they're trying to take out their prior high. So that's certainly a good thing, too. A lot of areas have to fight their way through overhead supply. Bots and AI, good day there, pushing into that. So maybe we'll get through that. Now, as I've said quite a bit, these V-shaped recoveries are hard to sustain. Doesn't mean that it can't happen, and that's where people sometimes get confused. It's like, well, Dave, you obsess over this overhead supply. It doesn't seem to be a big of a deal. Well, you have to know and think that anybody who bought in that range might be looking to get out at break even. So you can't completely ignore those type of things. Anyway, so far, cybersecurity breaking out the new highs, a little bit of vigor. The EFA shares, they're bouncing back. They were looking quite dubious just a few days ago, and I wouldn't rush out and buy them just yet. I don't like the way they've lost momentum, although they are coming back now, but there's really no structure there for me to get excited about at the moment. Broker dealer doing pretty good. Now here's a V-shaped recovery that was able to sustain. It did take a little pause here, which helps, okay? It sort of walks off that overbought condition, so to speak, by trading sideways. So that's a good looking area there, maybe on pullbacks. Biotech getting back to the areas with lots of overhead supply there. Now, in Landry 100, there's a few biotechs. Doesn't mean that you can't trade the biotechs, but ideally you want to trade a market that doesn't have a lot of overhead supply. But if you really like a setup, then by all means take it. Defense doing pretty good. Okay, that's one of those areas. I guess you can confuse the issue with facts. It had a V-shaped recovery and kept on keeping on. Doesn't mean that it's going to stop. Okay, but it'll keep going. There was a famous story. I forget where I heard it from. I think I heard it from Jake Bernstein in a conference once, but I've since seen it in books. And there was some guy that was coming off the commodity floor for soybeans, and Mark Douglas. I've heard him tell it too. Anyway, the guy was coming off the floor and he wanted to learn this technical analysis thing, and so some young kid was teaching him technical analysis, and said that, okay, this is support at 50. It won't go through the support. It's going to stop here. And the guy says, oh, really? So he picks up the phone. He goes, how much to move the market 10 cents? And the guy said, 500,000 bushels. He goes, at the market. And he puts the phone down, and then the market begins to implode through that level. And he says, you were saying? So, anyway, transports, again, that overhead supply problem. I mean, I guess in a good way, it's good that everything is not perfect, okay? Because if everything's perfect, then the market is kind of set up for failure, right? So we still have other areas that can improve, like mags for existence. There, for example, they are pushing through this overhead supply like butter so far. Again, cloud computing, overhead supply, but pushing through it. Platinum doing pretty good. Look at that. Bam, just kind of melting up in here. We could see some setups there fairly soon. Silver's been doing really good as of late. Let's take a look at, do we take a look at gold yet? Gold, the commodity, kind of hanging in there right above that 50. It is consolidating but trading sideways. It has lost some steam. Some of those stocks are starting to come out of Landry 100, but I wouldn't call them down and out just yet unless we get below that 30 for a little while. And now the 50's there too, the 50 simple. So maybe we'll start worrying then. But for now, it's kind of hanging in there, kind of doing okay. Bonds have begun to bottom out a little bit. Think the Lord, as Medea would say. But we're almost in uptrend proper order with these moving averages. Now, I wouldn't rush out and buy bonds. They got their work cut out for them, but at least we're not taking out these all-time lows. We're finding a little support there, shorter term and longer term, so that's good. Bonds up, rates down. Uranium and rare earths doing fairly well in here. Look at that. Right here, these brand new multi-year highs or all-time highs for that ETF. So that's a good thing. Energy is kind of abysmal, kind of all over the place. Unless you find a setup you really like, then I would pass based on this overhead supply. Financials have been improving. They're kind of choppy and wide and loose, but they have been improving, and they're not too far away from all-time highs. Obviously, they still have to get there. So overall, the market is improving and looking better and better. But check back often. About a week ago, and this is something that I've been talking about ad nauseum lately, take a look at like the P's. About a week ago, when we started selling off a little bit, the market began to look a little questionable. Now, I didn't count it down and out just yet, but you can see it lost some steam in here shorter term. It's stalling so far below the prior peak. And as I was preaching back then, and still do to this day, it's like, okay, when you're at an inflection point like that, a big up day looks really, really good, and a big down day looks really, really ugly. Be careful not to chase your own tail or get too excited one way or the other. All right, any individual stocks you guys want me to look at, I'd be happy to do that now. No show next week. I'll be taking the day off because it's 4th of July. So if I don't talk to you guys, I know everybody here, most everybody here is in Facebook, so I'll see you between now and then, obviously. But if not, everybody have a happy 4th. If you're not in the United States, enjoy your 4th anyway. All right, any individual stocks? Going once, going twice. Well, obviously, I want to thank everybody for attending. I appreciate you taking time out of busy schedules. Anything an answer, dave@davelandry.com. Everybody have a great day, and may the trend be with you. Thank you so much. You're welcome. You're welcome. Thank you.